Yes, people, a very, very happy month, all of you. So, guys, we're doing this chapter called as Final Accounts of a Company. In the last class, guys, we have completed a discussion where we had discussed the concept of equity and liability part of the balance sheet. Today we'll be heading forward to discuss the second half of the balance sheet, which is assets. So, guys, here assets is broadly classified into two categories. One is non-current asset. Second will be the current asset. Only two broad classification. Under non-current asset, we have the first item to discuss, which is property, plant, and equipment and intangible asset. But before we discuss what is non-current asset, we have to first understand the difference between current asset and non-current asset. So for that, we'll come back again to the theory part. The definition, the meaning of the current asset has been given by Schedule 3. So what it has got to say, let's have a quick understanding. Current asset means an asset shall be classified as current asset when it satisfies any of the following criteria. It's not all of the following criteria, any of the following criteria. If any one also is triggering, then it is current asset. Otherwise, non-current asset. First one, current asset is expected to be realized in the company's normal operating cycle period. All of you understand what is normal operating cycle period? All of you understand normal operating cycle period? Now, in this operating cycle period, you are expecting the amount to be realized. The example for this I have given is debtor. If any money that you are expecting to realize in the next 12 months or next operating cycle period, whichever is higher. Or current asset is an asset which is intended for sale. So which item is intended for sale? Finished goods. Intended for sale. Or it is intended for consumption, which is example is raw material. So an asset shall be classified as current asset if it is expected to be realized or is intended for sale or is intended for consumption. During what period? During the operating cycle period of the company. Any problem? Any difficulty understanding this? Easy one? Okay. I'll directly go to point number C. An asset shall be classified as current asset when it satisfies any one of the following criteria, which is it is expected to be realized, means current asset will be called as, sorry, or any asset will be called as current asset. Any asset will be called as current asset if it is expected to be realized within 12 months after the reporting date. So can I say it is point number A or point number C, whichever is higher? So this logic that I applied in current liability, the same logic we applied here as well. If you've understood current liability properly, it is just copy paste of current liability. It is just that the few words here and there are changing. Any problem? Next, a current asset is an asset if it is held primarily for the purpose of being traded. Can I say in current liability also, point number B was the same point. Liability held for the purpose of trading, but that was complicated. But this is very simple. Current asset is an asset which is held primarily for the purpose of trading. So what stocks do we held for trading? Stock in trade. Stock in trade is my current asset. Any problem? So A, B, C. Do you have any difficulties? When I ask a question, what are you supposed to do? Answer. How? Loudly. So point number A, B, and C. Do you have any problem? No. Point number D. An asset shall be classified as current asset if it is in nature of cash or equivalent to cash. Either it is cash or equivalent to cash. What is the meaning of cash and cash equivalent? We'll understand this twice. Once, now today when I do non-current asset, current asset, I'll be explaining what all items come under cash and cash equivalent. One more time we will understand in your accounting standard 3 revised, which is cash flow statement. So there we'll again understand the meaning of cash and cash equivalent, which is only relevant for cash flow statement. What we are discussing today, cash and cash equivalent, is a information given in the format of the balance sheet. That is what we have to focus in today's session. So cash and cash equivalent means anything which is in form of cash or equivalent to cash means what? The amount that is there in the bank. Anything which is equivalent to cash. What it is, we'll discuss in today's session. That is my that is my current asset. There's one condition here. An asset should be classified as current asset if it is in cash or cash equivalent. But if this cash or if these cash equivalents have some restrictions, then that you cannot treat as current asset. Means I have restrictions. I cannot use that money for the purpose of paying the current liability. Hello? What is the purpose of current asset? I'll be using all the current asset to pay my current liability. That is what we studied in the ratio topic. No, current ratio. What is the formula for current ratio? Current asset by current liability. All the 12 people, whether you are a metric student, whether you are a CBC student, current ratio was there. The first ratio that we discussed. Current asset by current liability. What is the purpose of that ratio? The purpose was of that ratio was to identify how much of the current asset is available to pay the current liability. Current asset is that money which is available to me, that asset which is available to me in next 1 year, which I can convert into cash and cash equivalent so that I can pay the current liabilities. Current assets are those assets which I can realize in form of cash and cash equivalent so that I can use that money for the payment of current liabilities. From where do you make the payment to current liabilities, people? From current assets only. Correct. So cash and cash equivalents are by default current asset, but there could be a certain cash equivalent which could have some restrictions. You cannot use that money for any purpose. For example, let's say you have a fixed deposit of let's say 6 lakh rupees in the bank for 6 months. Schedule 3 says that if you have any fixed deposit in bank up to 12 months, up to 1 year, it is a cash equivalent. So sometimes what happens, you will mark the fixed deposit as a lien. Let's suppose you're taking any loan from the bank. The bank will ask a security, no? So you told take my fixed deposit as a security, which means what? They have marked the FD as a lien against the loan that you have taken. Let's suppose I have a fixed deposit of, let's say 6 lakh rupees in HDFC Bank. For emergency purposes, I wanted some money, 3 lakh rupees I wanted. I don't want to break my fixed deposit. For emergency purpose, I wanted to utilize that money. I asked the bank for loan. Bank said, okay, I can give you against your FD. If you lien your FD 6 lakh rupees, I'll give you 3 lakh ka loan. I didn't want to touch my FD because if I break the FD, there'll be some penalty, the interest will be withdrawn, etc. etc. Problem is there. So as a sentimental person, I didn't want to touch my asset. I'm okay to take the loan and pay interest on it, but I sentimentally I don't want to touch my fixed asset. So I told bank, give me a 3 lakh loan. He said, I'll give you, but I'll mark that loan against FD as a lien. FD will be marked as a lien against the loan what you are taking. So now that becomes your restricted cash equivalent. So can I use that as current asset for paying current liabilities? No. So if any cash and cash equivalent is marked, as a lien or it was restricted for any reasons, then that is not my current asset. Am I loud and clear? So an asset shall be classified as current asset if it is cash or equivalent to cash, unless means what? It will not be a current asset if it is restricted from being exchanged or used to settle a liability. So if I cannot use that money for settling the liability, if we cannot use that money for settling the liability, if there is a restriction on it, in that case, that cash equivalent, though it is current asset, but because of that restriction, I will not call it as current asset. And the restriction should be what? For at least 12 months after the reporting date. Means for next 12 months and beyond that, 12 months after the reporting date, I cannot use it. It is restricted to be used to settle a liability for at least 12 months after the reporting date. Some reporting date take 12 months. For example, this is my reporting date. This is my reporting date. 12 months from reporting date ends where? Here. So restriction is there where? The restriction is there in this period to use it. If there is no restriction in this period, it is current asset. If there is a restriction during this period, it is not a current asset. Am I clear? So very simple. So let me take one example here. A trade receivable. Normal operating cycle period 10 months. Expected months of realization. Expected months of realization. Okay. So you're supposed to tell me if this trade receivable is current or non-current. So what do we do first step? First step, you will compare the normal operating cycle period versus standard operating cycle period. So standard operating cycle period is how much? 12 months. In this, what will you take? Higher, which is how much? 12 months. First step over. Second step, you have to apply that on the reporting date. So from the reporting date, I'm supposed to calculate the 12 months. So from here, if I calculate 12 months, the 12 months gets over here. 12 months period gets over here. So this becomes my benchmark date. Now the question further says that the expected months of realization is 10 months. So 10 months you can calculate from two places. One, from the date of transaction, when the credit sale is happening. From that date, 10 months you can take, or if that data is not available, you'll take 10 months from reporting date. Here, do we have the transaction date? When this trade receivable was created, when the credit sale was done, transaction date is given? No. In the absence of the information, for this 10 months, you'll calculate from the reporting date. Means from the reporting date, I'll realize this money in 10 months. So when does it get over? 31 Jan is the date of receipt of money. Now next we have to ask the question that whether I am receiving the money. What is current asset? Current asset is realization of the assets in form of cash or cash equivalent. How fast you're able to convert your assets into cash, liquid cash. So am I able to convert my asset, trade receivable, within or on or before benchmark date or after benchmark date? So I'm able to convert it before the benchmark date itself. So now this trade receivable, as on the date of reporting date, what I should classify, current or non-current? I should classify this as current asset. So here the trade receivable is current asset. Any problem? No problem. Okay. So let's suppose the expected month of receipt of the money is 12 months. So what is the date of receipt of money? The date of receipt of money is going to be same 31st of March 2026 in our example. Correct? So I'm realizing the amount on the benchmark date. So on or before the benchmark date means still it is my current asset. Any problem? Okay. If I have this money to be realized in 14 months, 14 months of the reporting date, 14 months of the reporting date, which means my realization happens where? Somewhere here. Which means how much? April, May. 31st May, I'm going to realize my money. That is the date of receipt of money. Now, if I compare with the benchmark date, I am going to receive this money beyond the benchmark date. Beyond the benchmark date. So hence this trade receipt will be classified as non-current asset. Any problem? So whatever steps you learned in current liability, the same step is applied here. That is why I took aram say each and every point I discussed properly in the current liability design. So that in current asset, we don't have to struggle. So what is my current asset? A current or any asset will be classified as current asset if it is expected to be realized. Expected to be realized is okay. Next, expected to be intended for sale. It is expected for intention for sale. Then it is consumed within that period of time. Within what period of time? Normal operating cycle period. An asset shall be classified as current asset if it is expected to be realized in the operating cycle period, if it is intended for sale in the normal operating cycle period, if it is intended for consumption during the normal operating cycle period. An asset shall be classified as current asset if it is expected to be realized within 12 months of the reporting date. So point number A and point number B, whichever, point number A and point number C, whichever is higher, we have to take. What is point number B? An asset shall be classified as current asset if it is held primarily for purpose of being traded. Example for that is stock and trade. And always by default, cash and cash equivalent are current asset, except when the cash equivalent are restricted to use for settlement of liability. In that case, I will not call that part alone as current asset. Correct? Now, all the assets, if it's satisfying these conditions or any one of these conditions, it is current asset. If any asset which is not satisfying any of these conditions, it becomes my non-current asset. So in Schedule 3, what they have done, they have defined current asset. They have not given any definition for non-current asset. They told if these points taken care, current asset. Otherwise, non-current asset. So non-current asset has been classified in the negative manner. So all the other assets which are not current assets are non-current assets. Any problem? Now, let's discuss all the items of non-current asset one by one. The first item that we're going to discuss is property, plant, equipment. Short and sweetly we call it as PPE. This is a name that is being derived from Accounting Standard 10. Accounting Standard 10, little bit we already discussed in CA Foundation. When we come to CA Intermediate, we'll be discussing about this in depth. Entire Accounting Standard 10 we are going to discuss. But are we going to discuss Accounting Standard 10 now? No. We're doing Schedule 3. We're just going to understand the accounting, what you've done as per accounting standard, the data, what we have as per accounting standard, how will you present the data in the Schedule 3 is what we're going to see. So Schedule 3 says that you have to have one heading called as property, plant, equipment, which is nothing but tangible assets. And intangible assets. So it is basically tangible and intangible asset. Can I use the word tangible asset there? No. This format, these wordings are given by Schedule 3. You can't change any word. So main heading is by be what? Main heading is called as property, plant, equipment, and intangible assets. Any difficulty understanding this? Under that, we have four sub-classification or four sub-category. First category is property, plant, equipment, which is nothing but tangible asset. Second category is intangible asset. Third is capital work in progress. Capital work in progress. What is it? We'll discuss. Fourth one is intangible assets under development. Intangible assets under development. So now, property, plant, equipment, the accounting of that will be discussed in accounting standard 10. What are we only learning here? The format and the presentation. So now, let me take you to the format of how a tangible asset needs to be prepared. This is the exact same way you prepare the schedule or note of tangible asset in the real life, in the Excel sheet, when you go and audit for any private limited company or public limited company. The first column is always going to be asset. Sometimes when you go for auditing in the real life, you might find the structure a little bit more complicated. You can make it more complex. If you want to give more extra disclosure, nobody's going to stop you. But this is the bare minimum disclosure that you have to give. You cannot reduce the format beyond this, like less than this. You can expand this format. You can make it a little bit more complicated and challenging if need be. Otherwise, not reducing this format in any manner. The first column is asset column, in which we talk about property, plant, equipment. What is the meaning of property, plant, equipment? You have purchased the land. You have the complete ownership of land with you. You have a building. The building is not half finished. The building is completed, finished, and you are staying in that building. You are buying a plant and machinery. It means you are completely utilizing that plant and machinery for your business, for production and manufacturing using the plant and machinery. F&F stands for furnitures and fittings. You have purchased the furniture, you have done the fittings, you are using that for your business. Vehicles. So these are the different category. Sir, are these the only category? No, we can keep on adding to it. I've just given few examples. So when I say something as PPE, it is an asset that we already own it and is complete and we're using it. It is completed and we're using it. Then there's something called as capital work in progress. Capital work in progress means what? It is that part of PPE which is still not, no, the construction or the build of that is still not completed. For example, I have started constructing the academy, own building, 3 floors building I have started constructing. Construction was started when, let's suppose, 1/4/24 it is started. The engineer said that it will take 3 years for me to complete the building. Assume what is wrong. 3 years it will take to complete the building. Now the total value of the building is how much? 3 crore. 3 crore. So what happened? From 1/4/24 to 31/3/25, 1/3 of the building got completed. 1/3 of the building got completed. For the portion that I got it completed, the building work, for that I have to pay that 1/3 amount to the builder. So what is the journal entry for that? Sir, money is going out of my bank account. So to bank account, 1 crore. Debit will be given where? Capital work in progress. So building, capital work in progress, 1 crore to bank. So this is an asset. This is an asset. What is the meaning of asset? Anything that I own in the business or anything that I expect to receive in the future is asset. I'll give you more in-depth meaning of asset when time comes. In simple language, I'm explaining now. Asset is your economic resource. You'll be using that for your business, for the development of your business, and from there you will be earning more and more further income. I'm trying to explain this in layman language. I'm not going in complicated language. So, can I call this as a complete building? No. Can I put this under PPE? No. When will you put something under PPE? When the building is finished, its completion, work is done. So now I have to put this in a separate category called as capital work in progress category, because those users of financial statement, 7 people, should know the difference between completed asset and non-complete asset. So when I put under this category, let's say 1 crore rupees, the users of the financial statement will understand that okay, building work is completed to the extent of 1 crore rupees. Am I loud and clear? Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
So capital work in progress will be shown separately. Sir, on this 1 crore rupees, will we do any depreciation? On this 1 crore rupees, will we do any depreciation? The answer is no. All the expenses incurred right from the buying of the asset or the building of the asset, till the asset is being put into use. In between, all the expenditure that you're doing has to be capitalized. And once you start using, only from that day onwards, you have to start calculating the depreciation. Who says this? Accounting standard type. Where did we study this? In CA Foundation. Am I loud and clear? So, asset list break down into two category. One is PPE category. Second is capital work in progress category. Any problem? No problem. Now here, all of you know, there are two methods for accounting depreciation. Do you agree with me? There are two methods for accounting depreciation. One is called as normal method of accounting depreciation. Second is called as provision for depreciation method. There's another name to that has been given. It is called as gross method. It is also called as net method. In this, which is gross method and which is net method? Normal method is net method. Very good. And PFD method is called as gross method. We have studied this in two places. Once in 11 CBSE, second in CA Foundation. Please tell me, in net method, what is a journal entry for depreciation? Depreciation account debit to asset account. Whereas, what is the depreciation entry in your PFD method? Depreciation account debit to provision for depreciation. So let me take one ledger and make you understand this point. In the normal method, if I'm buying an asset, let's suppose for 1 lakh rupees. So to balance brought down is, let's say, 0. And I've purchased a new asset for 1 lakh rupees. When on 1/4/24. From 1/4/24 to 31st March 25, I'm using this asset for how many months? 12 months. Full 1 year I've used it. Depreciation is 10%. Correct? So what is my depreciation entry? Depreciation to asset. How much? 10,000, 10,000. How, sir? 1 lakh into 10%. 10,000. So in the asset account, by depreciation, how much I'll record? 10,000 rupees. If I ask you what is the closing balance of this ledger, what will you say? By balance carried is how much? 90,000 rupees. This balance which is carried down is what is traveling to your balance sheet. So is this amount a gross amount or net amount? This is net amount. Net amount means what? Net of depreciation. From the original cost, when I minus the depreciation, I get a WDV. This is called as WDV, written down value. This written down value is called as net amount. So this approach or method is called as net method. Sir, whatever we studied in CA Foundation, in the depreciation topic, should we remember everything in the CA intermediate? The answer is 100% yes. The only thing that you need not remember is those new methods of calculating depreciation, which was production unit method, machine hour rate method, depletion method, sum of years digit method. These 4 methods alone not required. Rest, everything is applicable at the CA intermediate level. Straight line method of calculating depreciation, WDV method of calculating depreciation, normal method, that is net method of accounting depreciation, PFD method, gross method of accounting depreciation, revaluation of asset, re-estimation of the useful life of the asset. All that is relevant for your CA intermediate. You cannot forget anything. Am I loud and clear? So now when I prepare the balance sheet here, in the balance sheet, the asset, this is asset reflecting at what value? At the WDV value, 90,000 rupees. This is called as net method. But when I come to PFD method, which is called as gross method, what happens is the depreciation is not recorded in the asset account. Unlike net method, where the depreciation is recorded in the asset account, here in the PFD method, we will not record the depreciation in the asset account. Then where are we recording depreciation? In a separate ledger called as provision for depreciation account. The logic of this is discussed extensively in the CA Foundation. So same question, people. Same question. I purchased an asset for 1 lakh rupees. What is the journal entry? I've purchased an asset for 1 lakh rupees. What is the journal entry? Asset account debit to bank 1 lakh rupees. Asset purchase entry done. At the end of the year, I'm using the asset. So I have to record depreciation entry. What is the journal entry for depreciation? Depreciation to PFD. Same 10,000, 10,000. Correct? So now I have to open one more ledger called as provision for depreciation ledger. Very good. PFD is a ledger name. PFD is a ledger name. Opening balance is 0. By depreciation, it is 10,000 rupees. PFD nature is what? Provision ka nature is always credit balance. PFD ka nature is always credit balance. You recorded an entry depreciation to PFD. So in PFD account, by depreciation. Now I'm closing this balance. What is the closing balance? 10,000 rupees. And where is opening balance coming? On the credit side, 10,000 rupees. When do I say some item as a credit balance? Sir, whenever the opening balance is coming on credit side, it is credit balance. Whenever the opening balance, that is after balancing. In the case of asset, the balance brought on is coming on the debit side. So this asset is having what balance? Debit balance. If any ledger has got finally the opening balance on debit side, it is called as debit balance. If it has got opening balance on the credit side, it is called as credit balance. Correct? So asset is having debit balance, liability is having credit balance. Asset debit balance 1 lakh rupees. Where will you classify? Under property, plant, equipment. Correct? Provision for depreciation is got credit balance. Where will you classify this? Long term provision or short term provision? Long term. Short term. I'll take nice trick. Nice little video. What did I say yesterday? Which provision is going to come in your long term and short term provision? That provision which has got an outflow of money. Provision for tax, provision for warranty, provision for gratuity, provision for leave encashment. There's a possibility of future economic benefit outflow is there. Am I going to pay this 10,000 to anybody in future? This is reduction in the value of the asset. So I told you if any provision which is created, which is a reduction in the value of the asset, that will be subtracted from your assets. So since it is a credit balance item, initially it goes on liability side. But liability side, it does not make sense. So anything which we bring from liability to asset side, plus becomes minus. So this will be minus from your PPE. Correct? No. That is what I say always. Having presence of mind in the class is very, very important. Second, going home and revising all the concepts is very, very, very important. If you don't do it, nothing will be stayed here. All the students say, sir, we work very hard for the exam, sir. All the CA students, I believe they're hardworking. Most of them. Let's say 80% people work hard. Why only 20% people are able to create? What happened to remaining 60% people? They worked hard like donkeys, but they never did smart work. Revision is smart work. Practicing question is smart work. Writing test is smart work. Once you practice the questions, which question is difficult, marking that is a smart work. One day before the exam, you have time to go through all the questions. So in that one day of examination, what to study and what not to study, the planning of that should happen from now. That is called a smart work. Taking short summary notes is smart work. So doing hard work is not alone sufficient. Smart work with that is very, very important. With that, add a little bit of dedication, discipline, commitment. Correct? How do you make tea? Same process. Add a little bit of dedication, commitment, discipline, all that motivational points which I gave you. Put little by little. That is a complete package to become CA. All of you drink tea, coffee?
Yes, sir.
Coffee or tea? Tea. Okay. In tea, what do you put? First, water. Then tea powder. Then sugar, leave it. Spices, if you like masala tea, maybe. Milk is very important. Coming. She's like, milk, you're not putting milk. I'm coming. Wait. Milk you'll put. Everything you have put except sugar. Can you feel the taste of the tea? Sugar. Only one ingredient you miss. No. Rest all you put. No. What main thing she wanted? Milk. I put milk. Tea also I put. Masala. Masala also you want? I put masala also. You want elaichi, elaka, you put that also. Sugar I don't put. How will you find the taste of the tea? Will you enjoy that? Sugar patient, no other option. They have to enjoy that only. They have no other option. But people like us who don't have sugar so far, by God's grace, if I give you a sugarless tea or coffee, will you enjoy? Sugar is taste. The taste of the tea is bound by that sweet sugar. So how will you taste success when you don't have all the ingredients put properly? Forget sugar. If I don't put milk in the tea, will you enjoy? Chalo, tea is black tea. Those who are fond of milk tea, will you enjoy is my question. Those who are fond of milk tea, will you enjoy without milk? No. So tea I want, sir, but I'll not put tea powder, sir. Day. Thanni podrenda, pal podra. Milk, water, sugar. Will you call that as tea? Tell me. Then, if any one of the ingredients is missing, your tea that you've not savored that tea properly. You agree with me? Same thing in the process of becoming CA, you have to put a lot of elements into it. Hard work wherever required, smart work wherever required, dedication, discipline, commitment, accountability, responsibility. All these are the ingredients of tasting that success. If you miss any of that, can you taste the final success of CA? No. You come under those 60% people who have worked hard but couldn't clear. You go and tell everybody, sir, we worked so hard, we studied 12 hours a day, 14 hours a day. What did you do? You didn't follow the appropriate revision technique. You didn't do practice with proper timer, with format. You did rough practice. So when you went to the examination hall, you didn't know how to handle the formats. You took extra time. So when you took extra time, you came under anxiety and pressure. Gone. So there's so many things that will create disaster to you. Every point needs to be addressed smartly. Am I clear? So coming back, this asset is going to my PPE and PFD will go to credit balance. As per accounting, if it will go to trial balance, it will go to from the trial balance, it will go to credit balance, which is nothing but liability side. From the liability side, you have to manually regroup it to the asset side by way of minusing from PPE. But there is a presentation that has been given. You have to follow strictly that presentation. Am I loud and clear? Let me continue the same question here. Same question here. Now, what has happened is this second year is continued. Second year of purchase one more asset to bank for 2 lakh rupees. In the first asset, you have sold in middle of the year. The first asset is sold in the middle of the year at no profit, no loss. So what is the depreciation? 1 lakh into 10% into 6 by 12. How much it is?
5,000.
5,000 rupees. So 1 lakh was the initial value of the asset. First year depreciation, 10,000. Second year depreciation, how much? 5,000. So what is the written down value? 85,000 is the unused value of the asset. 1 lakh is the new value of the asset. New value of the asset. These are the used value of the asset, which means in the last 1.5 years, I've used the asset for 15,000 rupees. To the extent of 15,000 rupees, I've used the asset. So what is the unused value of the asset? 85,000 rupees. So this is called as WDV as on the date of sale. You sold that at 85,000 rupees itself. So no profit, no loss. Correct? Now please tell me, what is my next entry? What is my next entry? First is opening balance I recorded. Purchase of new asset recorded. Now depreciation entry. What is the depreciation entry? Yes. Depreciation account debit to PFD. So now next year, by depreciation, two amount will come. For machine 1, how much? 5,000. For machine 2, how much? Machine 2 I purchased on the first day of the year. So 2 lakh, entire year I've used the asset. So 2 lakh into 10%. How much? 20,000 is the depreciation. So what is my total depreciation? Right. Total depreciation all put together, including opening. 35,000 is my total. So 35,000 is my total depreciation. Means what? In the first year, the asset that I've used is for 10,000 rupees. In the second year, I've used the asset for 25,000 rupees. So put together for both the years, my total depreciation is how much? 35,000 rupees. Can I show this entire 35,000 as balance carried down? I said you in the CA foundation that always the PFD ledger should have the balance carried down, which is nothing but the accumulated depreciation of that asset which is still continuing in the business. In that machine, one is not continuing the business. So whatever depreciation is in this whatever is accumulated depreciation of machine 1, we have to remove and take it where? Take it where? To machinery account, asset account, or to asset disposal account if you're following asset disposal method. So this will go to, now let's suppose we're doing asset disposal method. You will follow asset disposal method only. The format which is given here is that of asset disposal only. So here you will take this where to asset disposal account. Asset disposal, sir? What is it? What is it? Where did we study? 2 places we studied. One in 11 CBSE, second in CA Foundation. Both the places we studied. And I told you in CA Foundation, do not forget this because it has got carry forward impact in CA intermediate. This is that impact. So asset disposal. How much will you transfer to asset disposal? How much will you transfer to asset disposal? Sir, this 10,000, which is the opening depreciation of the machine 1 and the current year depreciation of machine 1 put together, 15,000 is transferred to the asset disposal account. So from 35,000 rupees, if I minus 15,000 rupees, what is my balance carried down now? 20,000 rupees, which is nothing but accumulated depreciation of that asset, which is still continuing in the business. Am I loud and clear? Now you're opening another account by name asset disposal. Asset disposal. In the asset disposal account, what is my entry now? This is PFD account debit to asset disposal. So in asset disposal, by PFD. By PFD. Very good. By PFD, how much? 15,000. So when I'm transferring the PFD to asset disposal, can I say the asset also needs to be transferred to asset disposal? So now here, what is the total value of the asset in the asset account? 3 lakh rupees totally. 1 lakh opening balance, 2 lakh new purchases, 3 lakh you have totally. Now in that 1 lakh worth of asset is sold. So now I have to transfer this to asset disposal. So by asset disposal 1 lakh rupees. By asset disposal 1 lakh. So what is the balance carried down? 2 lakh rupees. So this balance carried down is a WDV or original cost? It is at the original cost. In the gross method, you never subtract the depreciation from the asset. So always the asset ledger ka closing balance is at cost, cost, cost. Any problem? So this data, what I'll do is, I'll be putting it here to make you understand how this is prepared. So if you don't know the basics, the financial statement schedule, you will not understand. Now this 1 lakh rupees is transferred to your asset disposal. What is the journal entry for this? Asset disposal account debit to asset account. So disposal account to asset. So to asset how much? 1 lakh rupees. And what is the return on value now? 85,000. And you sold that asset for 85,000 rupees. So buy bank 85,000 rupees. Upon sale, the ledger is closed. Am I loud and clear? Now this data, how do we put it here? Can I say this is the data of the plant and machinery? So what is the original cost? I'm talking about the second year. What is the original cost in the beginning of the financial year? 1 lakh. I'm substituting the data from the ledger to here. In the ledger, do you have any problem? If yes, please ask me. In the ledger, if you have any problem, please ask me. No problem? Okay. So now, I'm coming one by one. I have recorded the opening balance in the format here. Any problem? During the year, is there any addition happened? Yes. How much? 2 lakh worth of addition has happened. 2 lakh worth of addition has happened. So this 2 lakh will go in which column? Addition column. So total asset is how much? 3 lakh. Now what is the detail here? This is the cost detail, original cost. So which means what method are they following here? Gross method, because they want cost details separately. Okay. Now I'll tell you. You can follow net also. How it is to be done there also I'll tell you. Now let's just focus on this part. So we are trying to fit in the information of the cost of the asset. How many column do we have here? 4 column we have here. The first column is what? The balance brought on of the ledger. The opening balance of the ledger at cost. Am I clear? Second, addition at cost. Third is disposal. Means out of this 3 lakh worth of asset, how much worth of asset is disposed? 1 lakh worth of asset has been disposed. So can I say minus 1 lakh? If I do that, what is my balance original cost? 2 lakh rupees is my balance. How do I get this D? A plus B minus C. Same thing can I say here? A plus B minus C is this closing balance. So whatever I've done in this ledger, the same thing I've put in this format. Schedule 3 has taken this data from where? Ledger only. But in the ledger, what happens? You have ledger for different asset. I will not be able to get a proper summary. I'm putting the same data in the asset wise, one item wise, I'm putting it. So in one page, I'm getting to know the complete information about all the assets. As a user of financial statement, I'm one among those 7 users. Do I have access to your ledger? If yes, then I don't need this. But I don't have access to your accounts. I cannot see your ledger. I want to know the information. So please give me the data. This is the best way you can give the data. So how do I understand this? I will understand, Acha, this plant and machinery was there in the business to the extent of 1 lakh rupees in the beginning of the year. Acha, during the year, 2 lakh worth of asset is purchased. In that 1 lakh worth of asset is being sold. So what is the balance asset? 2 lakh. So person can understand this in a proper manner. Any problem here? Online people, any problem here so far?
No, sir.
Now, this is the information on cost of asset. Now you have to punch in the information about the depreciation. You have to punch in the information about the depreciation. Here also how many columns? 4 columns. First is total depreciation the beginning of the financial year. Means they're talking about the opening depreciation. So what is my opening depreciation here? Very good. Opening depreciation 10,000. Wonderful. What is the depreciation during the current year? Total depreciation during the current year. 25,000 rupees. This 5,000 of machine 1 and 20,000 of machine 2. This total 25,000 rupees. So what is my total depreciation? 35,000 rupees. This can be the closing balance. But is the machine 1 still there in the business? No. So I have to eliminate now the accumulated depreciation of the machine 1 that has been sold. That is my next column. Depreciation. Which depreciation? Accumulated depreciation of the asset that is disposed. Which is nothing but this 15,000. This 15,000. So minus 15,000 if I do, what is my closing balance? 20,000 is my closing balance. Oh my God. So whatever we studied in ledger, same thing they've copy pasted in format. Now tell me, whatever we studied in CA Foundation makes sense or not? How many questions we have worked out like this? How many questions? Imagine. Do you think in CA Intermediate, I can sit and work out all the questions one more time? If I start working out CA Foundation also in CA Inter, what will happen? What will happen? We can't complete CA Inter on time. Then forget Jan attempt. Give Jan 27 attempt, not 26, 27 attempt to give. Now, net block, net amount. Now you tell me, apply your logic and tell me, what is the net amount? You will take D column, which is the original cost, closing balance of the asset ledger, closing balance of the depreciation ledger. Both the closing balances have to net off. How much it is? 1,80,000. Same thing you do in the balance sheet. No, old format. Asset 2 lakh is the ledger closing balance minus provision for depreciation. How much? 20,000. 1,80,000 net balance is what you show. No. Okay. Easy. So this 180 will travel to your face of balance sheet. Where? In PPE. Here. 1,80,000 rupees will travel here. So any person who's reading this balance sheet, he will understand, acha, this 180 is the balance of the property, plant, equipment. But I want to know how this balance 180 came. So where will I go for that? I'll go to notes to accounts. I'll say, acha, this is the original asset. Oh, so much of assets purchased during the year. So much assets sold. Why they sold? Oh, this person is not having money. That's why they sold asset so they can make money out of it and use that money for the business purpose. So I can do some analysis out of it. And hence this information has to be openly be given. Whereas, do you present this kind of information in your financial statement of a sole proprietorship concern? No. Do you provide this information in the financial statement of a partnership concern? No. Because nobody is compelling you there. So as a partner, as any other person, creditor or banker of a partnership firm, I'm not having any awareness about your accounts. But here in Schedule 3 is very clear. My 7 users of the financial statement should be aware of the bare minimum information. They should be aware of this. And hence you have to disclose them all this information in a proper orderly manner. Schedule 3 is focusing more on the disclosure. As a CA, your responsibility, apart from accounting, is to take care of the disclosure requirement. Whether the company is giving the sufficient disclosure or not. That is where your important role that will play into. Am I loud and clear? The same thing will happen for CWeb. The same thing will happen for intangible assets. Same format. Ditto same format. What is intangible asset? We will discuss one more time in AS26 in depth, but already you have discussed intangible asset in depth in your CA foundation. So I want to ask, what is intangible assets? That answer what you're giving is all 11th standard. Unmatured people will give answer. No, that answer that is. That is example. What is the meaning of intangible asset? You cannot touch. So I'm a touch me not client. Emma, you're coming in CA Inter. You can't tell this. Touch means tangible assets. I cannot touch means intangible assets. So tomorrow your principal will ask, who's your principal? the firm where you will go and register for articleship, no? You will be registered under a CA. That CA is called as a principal. The principal is asking, what is intangible asset? So if I can touch you, you are tangible. If I can't touch you, you are intangible. He'll kick you out from the firm. Ah. The asset, that is slightly better. So any asset which does not have any physical existence or structure, this is at least decent. See, now this is what I want to make you understand. If you go to normal 11th, 12th and a BCom graduate, he will talk touch, no touch. He also say the same information, but in a polished manner. So any asset which does not have physical existence, adena, on a polished manner. That is a CA. Correct? You'll be understanding what is intangible asset in depth when I deal with AS26. But I have an example for all of you. Let's suppose I am an audit firm. We are using one software called as Tally software, right? And we have to pay that subscription fee for every year. So I paid one subscription fee of 40,000 rupees and I got Tally software. Now where should I record that 25,000 I paid? So it is to bank, money went out to bank. Debit is what? Tally software. This Tally software, where do you classify? Tangible or intangible? You'll classify intangible. You guys are terribly wrong. Any software where you have right to use and you're not owning it, it is not your asset. When Tally person gave you access, he gave right to use that asset against the money that you have paid. How much? 40,000 for 1 year. If you paid 40,000 rupees, benefit is derived only for 1 year. Benefit derived in 1 year. That is your expenditure. So Tally software is not your asset. For Tally company, he has created that software. And by the virtue of that software, is generating more revenue. So what is asset? Anything that you own. And from that, you can get some benefit out of it in future also. That is asset. So Tally company has created his own software. So he is giving the access to the software to multiple people in the country. And out of that, he's making money. So for him, the Tally software, what is invested, 50 crore rupees, that is his asset. Which asset? Intangible asset. Zoho, one of the accounting software. Whatever the Zoho company software they have created, for them, that is an intangible asset. You are using that. So for you, it is right to use it. Zoom, I'm using it. Correct? No? I'm paying Zoom subscription every month. Annually. Biannually, if I play it, suppose. Is it my asset? Will I take it to my asset? No. Let's suppose I'm paying the subscription for 2 years in straight shot. So as per matching principle, you'll apportion the cost for 2 years. But will you call that as intangible asset? No. That is deferred revenue expenditure. You're deferring the expenditure for 2 years. Are you able to follow? So, but for Zoom company, they've created this software, no? For that, they have spent a lot of money, no? That money for them, for creation of the software, is their intangible asset. Am I loud and clear? So if you're using any software, you're paying for that software, that is, you're getting a right to use. You're not owning it. So who will record an software as an intangible asset? The person who's owning that asset, software, will be recording that as intangible asset. About intangible asset, we'll be discussing in depth when we go in AS26. Now, all of you know what is PPE versus capital work in progress. What is PPE? PPE is the complete building which is completed and I'm using it. The building work which is completed, I'm using it. That is PPE. The building which is half done, it is capital work in progress. Half work done, capital work in progress. Similarly, I have created the entire software. Let's say I'm Zoho. I've created the entire software and I'm selling that software to different people. So that software I'll classify where? Under intangible asset. Also, Zoho is coming out with a different software, but I'm still working on that. The product is not completely developed. So that will be my intangible asset under development. Now you may ask a question, sir. The software is, still being developed. Understandable. In case of building, I said building, 1 crore rupees is the cost of construction. You are able to derive a cost out of it for purchase of bricks, cement, etc., etc. You're buying goods, material. You're paying money for that. So cost is there for that development. We understand. For intangible asset under development, what is the cost? How do we derive it? The person to whom you're paying salary, the software people, You're paying the salary, no? That salary will be capitalized to the ITA under development. The salary what you would pay to the software guy who's developing the software is not an employee benefit. It goes to your intangible asset under development. Am I loud and clear? Any expenditure incurred right from buying of the asset or constructing of the asset till the asset is put to use will be capitalized in the asset account. That is how you get the cost of intangible asset under development. Like that, for software, you have multiple, rights and access you have to purchase. Right? I have to buy server, let's suppose, something like that. So all this cost will be added to intangible asset under development. Once the software work is completed, whatever cost is there under intangible asset, from here you'll move it to intangible asset. That is whatever cost is there in ITA under development. Upon completion, this will be moved from IT under development to intangible asset later. When you start using the asset actually, that time you will shift the item. Am I loud and clear? Now, in this, you have any problem? Just talk from the classification point of view. Accounting point of view, I have a lot of information to share because I meant to discuss with you AS10 and AS26 with you. So, accounting point of view, don't ask. Classification point of view, if you have any problem, please let me know. Are we done with PPE and intangible assets? Yes. Next is non-current investment. Very, very important accounting standard, which is accounting standard 13. 100% question will come from this segment in your CA Intermediate Advanced Accounting examination. So I'm not discussing AS13 now. I'm just trying to discuss the items which will come under Schedule 3 of non-current investment. Under non-current investment, you have totally 8 categories. First one is investments in property. Investment in property. So the company has purchased a property. The company has purchased a property. If they're using that property for the purpose of their own business, will I record it here or will I record in PPE? Think and respond. Here also property is there. Property means what? Land and building. So land and building is coming here also. Land and building is coming here also. So which land and building I should take here? Which land and building I should take here? Think and respond. You're a CA now. When you're using that asset for the furtherance of your business, from where you're going to derive the benefit for the business, for the core purpose of the business, that property is your tangible asset. Property, plant, equipment. So what is the property here? You purchase this property, you want to just keep it for investment purpose. Property, investment in property means you want to generate returns out of it. You purchase a building, 3-4 building, 3 floors building, 3 floors building. You're giving it on rental purpose. So what is your intention? To get the rental yield. So that becomes your investment. So if any asset is purchased with the intention to be used for the furtherance of their own business, that asset will be classified as PP. Mark me very clearly, this is a very important classification. If I am buying the asset, land or building, guys, this has got multiple usage, so please concentrate. Land and building I'm buying, use for furtherance of business, used for furtherance of core business activity. Core business activity. It is your PPE, that is property, plant, equipment or intangible asset. I'm talking about any asset. I'm talking about any type of asset. If I buy land and building with the intention to sell, intention to sell, real estate agent, real estate companies, they buy the land. What do they do with that? They sell it. So in that case, it becomes your inventory. Oh my God. I'm buying the land with intention to sell. It is my stock in trade. So land, can we have stock in trade? Yes. For other people, land is investment. For real estate people, like how you have samosa, to sell samosa in your box, no? They have land like samosa in their box. So they buy land, sell land, buy land, sell land, buy land, sell land. So for them, it is stock in trade, inventory. Yes. If you buy land and building with the intention to earn the rental yield, to earn rental yield, or you want the value of the asset to be with you, and you want the asset to be with you, and you want the value of the asset to grow on longer period, to appreciate the market value of the asset. You want the market value of the asset to be appreciated. In that case, it is investment. I have purchased one land. I'm giving that land on rental basis. So my intention is to earn rental out of it. So it is my investment. That land is my investment. Or I'm buying the land. I want to keep it with me for 5 years, 10 years. Once the land value appreciates, I will sell it. My intention is what? To earn money out of the appreciation. So that is my investment strategy. That is my investment strategy. Any problem? Are you able to differentiate between these three? If I buy any asset and I'm going to use that asset in the business for the furtherance of my core business operations, it helps me to increase my revenue of the business. It is my PPE. For example, let's suppose I'm buying this entire building. Why? So that each floor, one course, CA Foundation, one course, CA Inter, one course, sorry, one floor, CA Foundation, one floor, CA Inter, one floor, CA Final, one floor, 11th, one floor, 12th, one floor. The purpose of this building is what? So that I can accommodate maximum people. With that, I can generate my revenue of the core business activity. So the money which I spent for buying this building, let's say 15 crore rupees, is what? PPE. That is the first point. Second, I'm buying the building with the intention to sell. I want to buy this building. I will not wait for the appreciation and all. I'll buy it, I'll sell it. I'll buy it one rate, little bit margin if I get, I'll sell it. Then that building, that land, that apartment is now being my stock in trade, which is inventory. Let's suppose in this entire building there are 10 complexes. I'm buying all the 10 complexes. I don't have the intention to keep it for longer period. Understand the intention. Intention is important for classification. My intention is to sell immediately whenever any good deal comes. With little bit more margin if I get, I'll sell it off. Then that land is my inventory. I have to be in real estate company for that purpose then. If I'm classifying something as stock in trade, then I should be in real estate business. If I buy any land or building or any complex where I have the intention to earn the rental income, or I'm waiting for the market value appreciation, that is my investment. Am I loud and clear? Now, one more example, last one. Any asset which is of this category, where I have the intention to dispose the asset, I've used one building, or I've used one plant and machinery. Now it is no longer usable in very efficient manner. So I want to sell it. I've put advertisements and all. I've started selling it. People have started coming in seeing it. That asset is under which classification? No. From PPE, you have to remove and take it to other current assets. Why? Because you have the intention to sell that asset, realize the money in next 12 months of the reporting date. And hence that will become a part of your other current asset. Oh my God. New information, no? So I'm talking about that PPE which you used in the business. You have won and tore completely. Now you want to sell it at a decent rate, not at scrap rate. So now you've invited people to come and see that asset. People are seeing that asset now. But till 31st March, you could not sell it. But you know, anytime in next few months, I will sell it. Because you're strongly working towards it. You're rigorously wanting to sell that asset. In that case, you have to reclassify that asset from PPE to other current asset. Why? Because that asset is no longer my PPE. What asset should be in PPE? That asset which is helping me in my core business activity. So if there is any asset which is not helping me in my core business activity, which you want to sell, you have to reclassify that from land and building, PPE to other current asset. Yes. Still it will come. No, any value sell, even at scrap value, you have the intention to sell. Means what? That asset is going to be converted into cash and cash equivalent within 12 months of reporting date. Then it is my other current asset. Any problem? Asset held for use will go to your PPE. Asset held. What is the intention? To use it for your core business activity. It will go to your PPE. Asset held in form of stock. Where you want to sell it, it will go to your inventory. Asset which is held for use earlier, now you want to sell it, it will go to your other current asset. And the fourth one is asset held for rental yield or market price appreciation. Market price appreciation will go to your investment. Generally, this is long-term investment because when you are wanting a rental yield, you will not want the rental yield for just 1 year. You want for more than 1 year. When you want to appreciate when you want to enjoy the appreciation of the price, it will not come in 1 year. It takes more than 1 year. So generally, whenever we talk about this is always non-current investment. Non-current investment. Am I loud and clear? So this fourth point I'll include and give it to you in your. Right away, else I'll forget. Where will this go? Inventories. Who said inventories? I can put investments. Current or non-current, you can decide based on the nature. I can put as investment. Asset held for use earlier, now held for sale, will go to other current asset. So if you have to understand the underlying purpose of the transaction. So depending on that, the classification has to be done. Can we come back? Okay. Next is what, sir? Investment in equity instruments means what? A company wants to. A company's got surplus money. They don't know what to do with that. So now they are purchasing the shares of either listed or unlisted companies. Listed company share you can purchase from the stock market. Unlisted company shares you can purchase directly from the company. So basically, I'm investing in some company. In which instrument? Equity instrument or preference instrument. It will come under the category B and C separately. B is equity, C is preferential, which means I'm investing in shares of some other company. If my intention is long term, non current investment. My intention is short term, current investment. Am I loud and clear? Online people, am I loud and clear? Similarly, investment
Yes,
in
sir.
what? Government or government securities or trust securities. So government will come out with multiple securities. For example, you learn income tax called as rural electrification bond. When you do the chapter called as capital gains, there's one something called as NHAI bond. National Highway Authority of India bond means what? If you're selling any land, okay, or any building or any asset, on that you would have earned some profits. On that profit, tax will come. Which tax will come? Capital gain tax will come. To save from that tax, the government says that if you don't want to pay tax to me, then invest in the bond which I tell. So they will tell which bond? REC bond. REC bond or REC securities. If you invest in that, then you will be saved from tax. So like that, the government may come out with certain securities and bond. If you have to invest in that for long-term purpose. Now, when you invest in REC bond, NHA bond, the term period is 5 years lock-in period. There's a lock-in period of 5 years. Means what? I'm not going to get this money back in 12 months. I'm going to get the money back beyond the benchmark date. So this will be what? Investment? Non-current investment, long-term investment. Anything, any investment you do in any kind of bonds, government bonds, private bonds, securities, where you will invest the money and that money will come to you after the benchmark date, then becomes your non-current investment. Investment in debentures means what? The company is issuing debenture. You are giving money to the company. So far the debenture what we studied in CA Foundation was from whose point of view? Company's point of view. For company that is borrowing, liability. But the person who's paying that money, for him it is asset. No. So which asset? Investment, non-current investment. So If let's say Reliance Limited is issuing debenture, I am paying 20 lakh rupees to Reliance Limited. Why am I paying this money to Reliance Limited? Because I want to invest that money in their business and get money out of it. So what am I getting in return? Interest on debenture. So that is my investment. So anywhere I put the money where my intention is to earn something out of it in return, that is my investment. So whether you're putting investment in debentures or bonds of any company, still that is non-current. If the intention is short term, for example, I'm putting the money in debenture, which is maturing within 1 year of the balance sheet date, then that becomes your current investment, short-term investment. Otherwise, if the money is coming to you only after the benchmark date, then it is your non-current investment. Like that investment in mutual funds, investment in partnership firm. Let's suppose KVA Limited. KVA Limited is a company. Let's say it is a public company, unlisted. We have another concern by name FFLA. That is a partnership concern. So what is KVA done? KVA has given investment to whom? KVA has done investment in the partnership. So that becomes the investment. Means not as a partner. So now we can say as a partner, nothing wrong. Because when I'm giving as an owner, if I'm giving money in the personal capacity, for me it is investment. For the firm, it is capital. Correct? No. So let's say there are three partners A, B, C. ABC is giving 1 lakh, 1 lakh, 1 lakh capital. Capital is for the business. In the balance sheet of the firm, you will classify this as capital. But in the balance sheet of private balance sheet of A, B, and C, it is nothing but investment. So company is giving capital to the firm in which it is a partner. Then that is my investment. And I don't have the intention to withdraw the investment anytime sooner. So it is a long-term investment. So it is my non-current investment. Like that, A to G are specific investment category. Apart from that, if you're doing any other investment, you can put in the residual category and you have to specify the nature of it. Any problem? Online people, any problem? Hello? Any problem?
No, sir.
Now, we're done with PPE and intangible assets. We're done with non-current investment. Now we're going to do C. You will leave it now. We'll be discussing when I do accounting standard 22. D. Long-term loans and advances. Long-term loans and advances. Long-term loans and advances. In that, there are three classifications. First one is capital advances. Capital advances means advances that has been done for property, plant, equipment. So can you please give an example for this? Yes. Yesterday, I told you a scenario where there is a company or there's a business which has got its operating cycle period more than 12 months. They have 15 months, 24 months. So what example I give you? Those are which companies? Aircraft or vessel or ship manufacturing companies. Correct? No? Yeah. Now, for my company, let's say this is Reliance Limited. Reliance Limited wants to buy one, let's say, helicopter for commutation of, obviously, who will commute? Mukesh Ambani will commute from home to, we'll all travel in road also maximum BMW. Correct? Helicopter is going. Big people. It's okay. We'll also get one day, no problem. Now, you know that helicopter, this is not a normal helicopter, which is there in any showroom. You do window shopping, you get income. It's not ready-made available. He will do a customized helicopter. I want this color design, this color, this feature should be there. When person is buying helicopter, he'll not buy Dappa helicopter, no. He want customized helicopter with all the brand name written. Signature should be reflecting. When they fly, that Mukesh Ambani signature should be seen from down. So this is a customized, very bulletproof, what do you call it, glasses. It takes time. So the company said, the person who is manufacturing this, he said, no problem, sir. We'll take 2 to 2.5 years to deliver this product. Will that person take the order free of cost? No. What will he ask against it? Advance. So now you have given, that helicopter is worth 5 crore rupees. 2.5 years it will take for that asset to come to you for using purpose. Today you have paid how much rupees as advance? You have paid 3 crore rupees as advance. How much is the worth of the helicopter? 5 crore rupees. So he said, the remaining 2 crores I'll take upon delivery. But you have to pay me 3 crores now. So what is the journal entry? So since money is going out of my bank account, it is to bank 3 crore. What is my debit? Helicopter advance. Helicopter advance 3 crore to bank. Correct? So helicopter advance ledger you have debited. So this ledger will have what balance? Debit balance. All the assets have what balance? Debit balance. So this is asset. Now under asset, where do you classify? Current or non-current? Current not possible because whatever money you spent 3 crore rupees here, you are not getting the benefit within the benchmark date. Within the benchmark date, the delivery is not going to happen. The delivery is going to happen after 2.5 years. Means after the benchmark date only the delivery is going to happen. That is when you'll get the asset. So what type of asset this is? Non-current asset. If I get any benefit of the asset beyond the benchmark date, if I get the benefit of the asset beyond the benchmark date, it is my non-current asset. So this has to go under non-current asset. But where in a non-current asset? Can I take it to PP? Not possible because it is. Sir, can I put under capital work in progress? No, you are not constructing. Please understand. You just gave advance. Capital work under development or progress means what? You are sitting and constructing helicopter. So in case Ambani spent 3 crore where he is constructing the helicopter in his premises, in his company, then you take under CWIP, I have no problem. But somebody else is developing the asset. You don't have anything as your own asset. Guys, here when I say capital work in progress, the building which is half done, I can touch. I can tell this is my building, I can go and hug. Correct? No. This helicopter, some foreign company is preparing. The physical asset is there with somebody else. So can I put under capital work in progress? No. Can I put under non-current investment? No. Can I put under deferred tax asset? No. Can I put under long-term loans advances? Yes, because this says long-term loan given or advance given. Advance in any form. Advance in any form, which is long-term in nature, will come under this category. So I'm giving loan to my friend, telling that my friend, take 1 crore rupees loan. Give me after 5 years. Enjoy. So loan given will come back to me after 5 years. It will come back to me after the benchmark date. So it is my non-current asset. Same way advance given for purchasing the helicopter, aircraft, vessel, ship, where the asset is going to come back to me beyond the benchmark date. So this is my non-current asset. But where in the non-current asset, you will classify under long-term loans and advances. So are you clear with the example of capital advances? Capital advances means advances for the property, plant, equipment. Just not property, plant, equipment, even for intangible asset. If you're giving any advance and somebody else is developing in their premises, then that capital advance will also come here. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Yes, sir.
Correct. Now the question what is asking is, sir, let's say after 2.5 years, this asset is come to me. Now what will I do? In that case, the first entry what you pass today is what? Helicopter advance account debit to bank 3 crore, 3 crore. When the asset is coming to you, what happens? You will close this 3 crore by giving a credit. So 2 helicopter advance, 3 crore, you will close it by giving a credit because it is no longer a advance. The asset is realized. So I'll go to your helicopter account debit 5 crore. In that, the money 3 crore is adjusted against the advance ledger. And remaining 2 crore you're paying now. To bank 2 crore. So the day when you get the delivery of helicopter, like how we get Amazon delivery, big people get delivery of helicopter. So in that case, what happens? You will reclassify this 3 crore from capital advances here to your property, plant, equipment. So in the property, plant, equipment ledger, where is it? Here you'll add vehicle is chiller, helicopter. Reclassified. Any problem? Online people, any problem?
No, sir.
No, sir.
Second classification, loans and advances to related parties. Related parties. The meaning of related parties I have not yet discussed. When I discuss what is related parties, you'll understand. Basically, I'm giving some money to related parties. Related parties is not relative. Some people think relative, related party. Both are same. No. Relative is coming under related party, but related party has got a huge meaning to it. Very complicated meaning. Now, this is not the right time to discuss. So, any money given to related party, which is going to come back to you in future when after the benchmark date, that is your long-term asset. So this will come under where long-term loans and advances will come. Next, other loans and advances specified. Now here they have to related parties. Let's suppose I'm giving this money to my friend or some third person. Let's say I'm giving to my student also. I will take 1 lakh rupees loan, give me after 5 years. So where will I classify under category number C, other loans and advances? Any problem? So in that, there's one disclosure that you're supposed to give that whatever advances you have given, you have to tell whether this is secured or unsecured. So the advance what I gave, against that do I have any security? For example, I lent 1 lakh rupees to you. You may give me a gold, let's say you have a gold bracelet or a ring, you're giving me as a security. If it is secured against any particular item, then you have to mention this is secured. If I've given you a loan and you're not giving any security, then you have to mention in bracket it is unsecured. What is the meaning of considered good and not considered good? or considered bad? Considered good means what? You're expecting that this money will come back. There's no dispute, there's no problem. But when you say considered bad or considered not good means you feel that doubtful this money will come to me. So when you are doubtful in receiving the money back, that is considered not good or considered bad. So considered not good or considered bad means what? You're having a doubtfulness about the recovery of the money. That is what is the meaning of considered good and considered not good. Any problem? That is considered doubtfulness. Then you have to show that there is a doubtfulness in this particular item so that those 7 people will know about the status of this loans and advances. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Yes, sir.
What is the next item? Other non-current asset. Anything which we cannot fit in A, B, C, D will go to a residual category called as other non-current assets. So what are those? Let's have a look at it. The first one is a long-term trade receivable. Long-term trade receivable. Now for that helicopter company who got 3 crore now, the remaining 2 crore when will they get? After the deliveries happened. Imagine Ambani saying that you deliver the helicopter after 2 years. Remaining 2 crores I'll not pay now. From there I'll take another 2 years to pay the money. So now think from the helicopter company's point of view. You took 3 crore advance here. I'm talking from helicopter manufacturing company's point of view. You took 3 crores today. This 3 crore helicopter company will classify as what? Liability. 100% liability. No, because this is income earned in advance. Current or non-current? It will be non-current because when will you deliver the asset? After 2.5 years. Correct? So this is income received in advance. It's a not current liability. It is a non-current liability. Other non-current liabilities. Am I clear? Now what happens? 1 year gone by, 2 year gone by. This is here. This is the date when the helicopter is delivered. Here, this person will recognize the income. Who? Helicopter company. He will recognize revenue from operation full 5 crores. In that, 3 crore is adjusted against the advance money. Remaining 2 crore, Ambani said now, I'll pay after 2 years. Means I'll pay here. I'll pay the 2 crore rupees here. So now, can I say this 2 crore for the helicopter company is receivable? When am I receiving? After the benchmark date I'm receiving. After the benchmark date I'm receiving. So in that case, this 2 crore becomes my long-term trade receivable. No, you cannot say Ambani get lost. No. Can I say that, fellow? Because next time, I will not get an order from Ambani. No? So I cannot say get lost also. Ambani says after 2 crores I'll payments, I have to keep quiet. Okay, sir. Correct? No. So this receivable is coming to you after benchmark date. In that case, this is what? Long-term trade receivable. So for helicopter company, manufacturing company, can I say this 2 crore is trade receivable? Debtor? Yes or no? Yes. But it is coming beyond the benchmark date. It is long-term. Let's suppose this money is coming to you here. Let's say after 1 year, the money is coming to you. After 1 year, the money is coming to you. Since the money is coming to you within the benchmark date, so this becomes your short-term trade receivable. Clear? So that benchmark date classification is very, 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 very important. In that, how much is secured, how much is unsecured, how much is doubtful. Secured, considered good means what? It is secured also, and there is no fighting also. You have the belief that money will come to you. Considered good means what? It is good debt. Means it will come to us. There is no dispute, there is no fighting between us. Unsecured means what? There is no security. The helicopter company has not taken any security. Then it is unsecured trade receivable, but it is still considered good because the money has to come from Ambani. What will happen to Ambani? No problem. He will give me the money, no problem. Doubtfulness. Forget Mukesh Ambani. Imagine this helicopter order was given by Anil Ambani. Now you remember what happened to Anil Ambani? Declared as? Yes, insolvent. Now the doubtfulness will come or not. Every day that helicopter company will get heart attack. Every day he has to do ECG. How many bypass we don't know. You understand what is bypass surgery? Heart attack bypass surgery. How many times you would have done? I don't know. 2 crore rupees. In that case, you will classify under doubtfulness category. Okay, not okay? Online people, okay, not okay?
Okay.
Now,
Yes, sir.
offline people, no energy. I'm going, bye. I'm going, bye. One last time. Okay, not okay? Much better. तो बाय बोला ना तुम मिल रहे को क्लास के बाद security deposit what is the security deposit Yesterday we took an
எங்க
example.
பண்ண எங்க இருக்கா
ஏவன்டா அது?
அடுப்புல போயாச்சா திருப்பூர் போயாச்சா
போயாச்சுமா. நீ போயிட்டியா? I thought she's talking to me. Now, security deposit. We took an example yesterday. EB connection, BSL, phone. So this is BSNL. This is customer. Let's say company, KVA Limited. Who is giving deposit to whom? KVA is giving deposit to BSNL. Let's say 1 lakh rupees deposit I'm giving. From BSNL point of view, BSNL is receiving this money. For them, is it asset or liability? Asset. Liability. Donkey fellow, if you have confusion, pass an entry. No. BSNL is receiving money. So bank account debit 1 lakh. To what? Security deposit 1 lakh. When I create a journal entry with credit, that ledger will have what balance? Credit balance. Which ledger will have credit balance, or which item will have credit balance? Liability. So this is liability. Okay. Now for BSNL, what liability is this? Current or non-current? First, non-current, because BSNL has no intention to give this 1 lakh rupees anytime sooner. When will BSNL have to give this money back? If I'm surrendering the connection, then they have to give the money back. Otherwise, not. I don't have the intention to surrender, nor BSNL has the intention to pay. So which means definitely this money is going to come back to me when? After benchmark date, or BSNL is going to pay this money after benchmark date. So this is long-term liability. In long-term liability, where you will classify? I don't know. You think and decide and tell me. You're asking me? The way he's answering it is like, I remember this one reality show called as Kaun Banega Crorepati. In that particular scene, Shah Rukh Khan was hosting it. So this one gentleman sitting opposite. So Shah Rukh Khan is asked question. He was confused between the 4 answers. So he was saying one answer. Lodi dynasty, looking at the expression of Shah Rukh Khan. If Shah Rukh Khan smiles brightly, then that is the answer. So every time, all the 4 options, he will say slowly, answer is this, and he look at him to see what is Shah Rukh Khan's expression. Shah Rukh also like that. Idana, final. He'll keep on changing the answer continuously. Every time he answers it, he will answer it as if he is going to ask the answer from Shah Rukh Khan. So same way this gentleman is asking me, like that. Who tell me confidently this or that answer? Other long-term liabilities, what Subiksha is saying? Others. Huh? Can I put this into long-term borrowing? Not possible. Can I put under deferred tax liability? Not possible. Can we put in long-term provision? No. The only option is other long-term liability. Where under other long-term liability? Where under other long-term liability? You have to remember all those points. Otherwise, you'll have a tough time in telling you. In that, you have trade payable. You have trade payable. Will I classify trade payable? No. We have to classify under others. Security deposit taken. In that, you will classify.
Deposit under long-term borrowing is a loan. This one is
long-term borrowing lenga ma deposit. Oh, this deposit is where I've taken the deposit with the intention to borrow money. Matlab, that's what I told in yesterday's class. In long-term borrowing, the deposit what we have is not a security deposit. This is a borrowing what I've done where I have intention to pay interest against the money what I'm using. Whereas this deposit, I am not going to pay any interest. BSNL is not going to pay any interest. EB department is not going to pay any interest. It is deposit against the connection what they've taken. I gave the same example. No, if I'm giving that last room as rental to somebody, I take a deposit. Why I'm taking a deposit? Tomorrow, if that person does not paint properly, if he's broken some items inside, I will use the security deposit as a safety measure. My intention is not to borrow the money from him. So that deposit and this deposit both are different. Now coming back to this one. Here, the same example. Where's the example gone? Okay, we'll do it here. So this is BSNL and this was KVA Limited. So now KVA Limited is giving 1 lakh to BSNL. So BSNL it is long-term other non-current liabilities. No, long-term liability. That is other non-current liability. Do you agree with me? For BSL it is other non-current liability. But KV is giving this money. For them it is asset, because money is going out to bank 1 lakh, and debit is what? Towards the security deposit. So security deposit account debit to bank 1 lakh. Now this is debited. If this account is debited, the ledger will have what balance? Debit balance. So which type of accounts have debit balance? All the assets have debit balance. So this is asset for me. Why this is asset? This money 1 lakh what I'm giving in future, sometimes when I surrender this connection, I will get the money back. So anything that I get back in future is my asset. Anything that I get back in future is asset. Now the question is, this asset where will you classify? Current or non-current? Sir, I'm not expecting this connection to be surrendered in next 1 year. So definitely I'll not get this money back in next 1 year. So it is definitely going to come to me only after the benchmark date. So it is non-current. So where is non-current asset? Other non-current asset. Because I cannot put under PPE. PPE not possible. Neither this is my non-current investment. So what is other classification? Deferred tax asset not possible. Correct? Then what else is there? Tell me. Hello. Long-term loans advances. Can I put under long-term loans advances? This is long-term loans advances. Have I given loan to the BSL company? Have I given advance to it? No, they are treating this as a security deposit. Loans advances means what? Advances for the capital goods, for assets, for goods, for services, long-term in nature. Advances means that loans means what? I'm getting some money with the intention to earn interest. So is the security deposit on that? Am I getting any interest? Am I getting any asset against it in the future? No. So it is not a part of my long-term loans advances. So only one option left is other non-current asset. Any problem? Next is other. Other means what? Deposit. Which deposit? Fixed deposit. You have put fixed deposit in the bank with the maturity of more than 12 months. So if I put any fixed deposit in the bank where the money will come back to me beyond the benchmark date, then that is my other non-current asset. Sir, maturity less than 12 months, where will it go? You will say current investment. No, it goes to your cash and cash equivalent. Who's saying this? Schedule 3. I'll discuss now shortly. Insurance claim receivable more than 12 months. If let's say you had a fire accident, or let's say a company's got a fire accident in their premises. Now they applied for insurance, but there's some dispute or some problem, and the insurance company says that I'll be able to give you this money, but not immediately. I'll give you after the 12 months of the balance sheet date. Means you're going to get this money beyond the benchmark date. In that case, this insurance becomes your other non-current asset. Generally, this will not happen. In most of the case, the insurance claim will disperse the amount within 6 months, maximum 6 months. But I'm talking about in rare scenario, if the money is going to come to you beyond 12 months, then this becomes your other non-current asset. I'm just giving you an example here. Any problem? Doesn't matter whether it is automatically getting renewed. Now the question what is being asked is, if the FD is getting automatically renewed, then what to do? You have to ask a simple question. The FD which is getting renewed, either you renew it or automatically getting renewal. You have to ask that, will I get that money within 12 months of balance sheet date or not? If you're getting the money back within the 12 months of the balance sheet date, then it becomes your cash and cash equivalent. If the money is not going to come to you within the benchmark date, it is going to come to you beyond the benchmark date, that is your other non-current asset. That is the only question that you're supposed to ask. Am I loud and clear? Next is current investment. Same items. All of these, if you are going to receive on or before the benchmark date, then this becomes your current investment. Same item under non-current, same item under current. Any problem? So coming to current assets, the first one is current investment. Any problem? No problem. Second is what? Inventory. Inventory will be discussed extensively in AS2. AS2 one time we've already studied in CA Foundation. A small portion of that is remaining, so that we'll study in the CA Intermediate. But a major chunk of AS2 is already being covered in AS2, which is covered in CA Foundation. Now coming back to inventories. Now here, what are you supposed to do? You are supposed to disclose the information about the different types of inventories. How many types of inventories you have? Generally, 4 broad categories of inventory, which is raw material, work in progress, finished goods, and where is stock in trade? Stock in trade. These are those assets which is there in your business held by you. Because I've told you, when you record the entry for closing stock, there's 2 entry. What is one entry? Statement of P&L account debit to inventory. Correct? No. 11th we record entry. What is entry? Sorry, I told ulta. Inventory account debit to statement of P&L. In 11th standard, what entry we recorded? In CA Foundation, what entry we recorded? Closing stock to trading account. So instead of closing stock, closing inventory. Instead of trading account, to statement of P&L. So this is what creation of asset. This is what reversal of expenditure. So now you are telling that, sir, inventory already came under change in inventory. That is one part of the journal entry. Which part of the journal entry? The credit part of the journal entry goes to your changes in inventory. Debit part of journal entry represents your inventory, no asset. That should go where? In your current asset under inventories. So here what will you show? Opening, closing, the difference will you show, or only closing balance will come here? In changes of inventory, you did opening minus closing. Here opening minus closing will come, or only closing will come, or only opening will come? Only closing will come, because we are preparing the balance sheet as on the closing date. So as on that date, what closing balance is coming, that only you are supposed to record. So inventory here only closing balance, closing balance, closing balance. For that matter, all the items of asset, all the item of liability is the closing balance of that particular date, is what you're showing in the balance sheet. Am I loud and clear? So raw material, WIP, finished good and stock entered, understood, sir. But what about these items? If you remember, we studied in accounting standard 2 in CA Foundation that stores and spare parts, loose tools. Stores and spare means what? Let's suppose I have a machine. In that machine, on regular basis, I have to put oil for greasing purpose. So oil here. Correct, no? Then I have nut and bolt. I'll use this nut and bolt for multiple purpose. For my machine, for so many different places, I'm using this as a spare part for multiple purposes. It is general tools, loose tools. I have something, let's say spanner, cutting plier, all this there. No, these are my loose tools. So you will feel that this is my asset, I'll take it to the PPE. Accounting standard 2 says that very clearly, if you have any stores and spare parts, or if you have any loose tools which is general in nature, you are not supposed to take to PPE, you will take it to inventory. Who is saying this? Accounting standard 2. Where did we study this? CA Foundation. Do you remember? Loose tools and spare parts, if it is specific in nature, I can use that spare part only for that particular machine and not for any other machine. That is my asset. It goes to a PPE. But if there is any spare part which is general in nature, I can use that for any purpose. Then it becomes my inventory. So based on the compulsion of accounting standard 2, this stores and spares and loose tools are now reclassified into inventory under inventory. Am I loud and clear? In your other expenses, what was your first item? Other expenses. Other expenses, what is your first item? Other expenses, first items. Consumables. Correct, no? Cost of consumables. What did you consume? Sir, this oil, stores, spare part, loose tools we consumed. So the cost of consumption is taken to other expenses. But if there is any oil, loose tools, as stores and spare, which is there as a closing balance, as asset in your hand, in the godown or warehouse, that is your asset. That is your asset. So stores, spares, and loose tools will be your inventory. Am I loud and clear? Am I loud and clear?
Yes, sir.
One more is goods in transit. Goods in transit. Now listen to me this point very carefully. Seller. The seller has got one factory. Okay, he says that I will take care of the ownership of the product. That is, if there is any physical damage of the goods happening in my premises, I will take the responsibility. But the moment I put the what is this? Lorry. That good artist I am. You're able to understand what I've drawn. Very good. So now the moment I load the stocks in the lorry, if anything wrong or damage happens to the product, I will not be responsible. Who will say? The seller will say. In that case, buyer has no other option. Buyer has to say that, okay, no problem. This delivery, I'll take it my risk. This delivery, I'll take it my risk. Okay. So now, if buyer also says, no, I will take the responsibility only when the goods come to my premises, then who will take the responsibility for goods in transit? Somebody has to take, no? If seller is not taking, then buyer has to take. So if we buyer are taking the responsibility, then this becomes goods in transit and this becomes a part of our inventory, which is in transit. If seller is taking this responsibility, then for him, it will be goods in transit. So whoever is taking the responsibility of the goods that is there in transit, that person will show the inventory in their books of accounts. So it could be either buyer or the seller. Whoever is taking the responsibility of that goods which is in transit. If something happens to that goods, if it is getting damaged, it means with an accident, I will take the responsibility. Like that, whoever says that, that person will record the goods in transit. Because somebody has to record. Guys, there will be so many lorry that will be traveling on 31st March and 1st of April. 31st March and 1st of April, so many lorries will be in transit on highways. It is neither in the buyer premises nor in the seller premises. So who should record the inventory? Whoever is taking the responsibility of goods in transit, he will record the inventory in his books of accounts. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Everybody, please open your mouth and respond. Offline people, am I loud and clear? Yes, sir. Okay. In this, if you have any doubts, please let me know. That's all, guys. Few more points will be done. Then we'll take a break. Then we'll start one question of ICA model today itself. Any problem with the inventory part? Now, below that, I've given a note. If loose tools are general in nature means what? I can use that loose tools for any purpose. It's not specific to any asset. Then I will classify that as inventories. But if there is any loose tools which is specific in nature, means I have used that spare part. Any loose tools or spare part, I can use it only for that asset and not for any other purpose. Then it will be classified as PPE. Let's suppose there's a machine in my factory. Now there is a big part of that. Let's say there's a motor of that. It's a spare part motor. I can use that motor only for that particular machinery, not for any other purpose. Then that spare part becomes a PPE. This we have studied in detail in the CA foundation. I'm just giving a recap and revision of it. If this is understood, can I go forward?
Yes, sir. Yes, sir.
Next comes trade receivable. This format is looking similar to trade payable. Correct? No?
Yes.
Same way, I have to give the disclosure here also. Now, when I am asking the disclosure of the period, this is called as aging. This is called as aging. Aging will be given only for debtor and not for bills receivable. What is the purpose of this aging? The purpose of this aging is to understand this money which I am due to receive from customer, for how many months I have not received the money after the due date of the payment. I have changed the format here. This heading I have added. This is there in the schedule 3. What is this meaning? What is this period? This basically, these balances are outstanding for the following period from the due date of payment. Means what? Let me take example. Yes. This is the reporting period, 31st March 25. Okay. There's one particular person who's supposed to make the payment to me. That is one particular customer or debtor who's supposed to make the payment to me on 30th of September 2024. This is the due date when I'm supposed to receive the money. How much money? 1 lakh rupees. But this fellow did not pay the money. And this money is outstanding for how much period? 6 months period it is outstanding. So now, can I say on 31st March still this amount is receivable? Yes. Now, you will put under which category? This is disputed, not undisputed. So first 2 are undisputed, next 2 are disputed. Now, this 1 lakh rupees, you have to ask yourself 2 questions. Whether it is good or bad. Second, it is disputed or undisputed. Good or bad. Second, disputed or undisputed. Good means what? This 1 lakh will come to you. It will not go anywhere. You have a satisfaction. You have a belief that this will come to you. There is no doubtfulness. But when you feel that this money may not come to me, it can become bad. It's not good. Then you have to say this is not considered good. Disputed means what? This payment the customer is not given because there's a dispute. Why there's a dispute? The customer asked for one quality. You gave some other quality. He said you give a different quality. No, I'll not give you the money. Easily. You harassed me by giving a wrong quality. I will harass you for the payment. Now both of them are disputing. I don't understand what is the meaning of dispute. There's some problem. Now people think that dispute means what? They've gone to court. No. Every dispute will not go to court. You will also resolve the dispute among yourself. So if there is any disputed, then put under disputed category. If it is not disputed, undisputed categories. How many categories total? Four categories. Good, disputed, good, undisputed. Or disputed, good, disputed, bad. Undisputed, good, undisputed, bad. So four categories. Now please tell me, this 1 lakh rupees is good or bad for us? Anywhere in the question did they tell or did I tell this is doubtfulness? Did I express my doubtfulness? No. So it is good for me. Did I say that opposite customer is not going to pay me because of the dispute? Is there a dispute between us? There's a fighting between us? No. Opposite person, Pawan fellow, does not have money. He said, sir, give me 6 months more. I'm struggling. There's a COVID period come into picture, or let's say some problem happened to me in my business. Some issue happened. I'm not having sufficient money. Please give me 6 months extra, sir. You were saying okay for it. You said okay for it. So is it disputed? No, it is undisputed. So where will I show it? Undisputed, considered good. But under which category? 0 to 6 months. 0 to 6 months means what? Less than 6 months. That is 5.99 months. But here it is disputed for 6 months. So the moment it has 6 months, it comes here. So 1 lakh will be shown here. In the outer column, 1 lakh will be shown here. So 1 lakh is receivable. This is yet to be received for how many months? It is receivable from 6 months to 1 year. It is outstanding. That is from the due date. It is outstanding for 6 months to 1 year. Am I loud and clear? Some people think that the due date will fall in 6 months later. Due date will follow 1 month later. No, no, no. These are those where the due date is crossed and still not yet received.
So what
Am I?
if the due date is not yet?
Then you will not put under aging. Without aging, you will show the receivables. Guys, this aging is only for those receivables where the due date is crossed. And you have to tell how much days are crossed. There could be certain receivables where the due date is not even come. That you will show separately. You will not put under aging. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
So, in the trade receivables, do you have any problem? Have you understood the meaning of what is undisputed, considered good, undisputed, considered bad, doubtfulness, disputed, good, disputed, bad? See, dispute also it can be good. Dispute is there, but we know money will come. If I resolve that dispute, money will come, I know. So I don't have any doubtfulness. I gave wrong quality, so he's harassing me. I know money will come to me. There's no doubtfulness. So it is disputed and considered good. Now tell me if you have any problem in this. Online people. Online people, hello. All are sleeping, I'm telling you. Smriti, you there? Smriti? Sumanyu, Sumanyu, Sumanyu.
Sir, yes, sir.
Harimon, Harini, Jivika, Sudarshini, all of you. Are you there?
Yes, sir.
Yes, sir.
Doesn't look like that you're there. Now, next is what? Cash and cash equivalent. Cash and cash equivalents. There are multiple bifurcation. Cash on hand is cash is cash. Checks in hand means what? You've received the check from the customer, but you've not deposited. So checks in hand is your cash and cash equivalent. Draft in hand. Draft here means demand draft. Now the concept of demand draft is not much prevalent, but it is still not closed. If I want to make any payment to the party, I can still use the concept of demand draft. I've discussed this in the BRS topic, so I'm not going one more time in depth. Second is balance with the bank. See, in the bank, you open multiple type of account. Savings bank account, current account, deposit account, any kind of account. So all that will be disclosed here. So generally, business people don't open the savings bank account. Companies will never open the savings bank account. They'll open only current account. So current account balance. If in any bank you have current account balance, you have to show that. Sir, in my business, I have 3 current accounts, sir. Then those 3 current accounts, in the inner column, you have to show the breakup. Axis current account so much, HDFC current account so much, ICICI current account so much, separately you have to show. Second, in the deposit account. Which deposit account? With the original maturity of 3 months or less. 3 months and less than 3 months will be coming under point number C. More than 3 months, up to 12 months will go to point number D. More than 12 months will go to your non-current investment. Non-current investment. Am I loud and clear? Online people, am I loud and clear?
Yes.
Yes, sir.
So other bank balance means what? Bank deposit with maturity more than 3 months, because 3 months and less than 3 months is coming under your category C. But 3 month 1 day, 3 month 1 day, and 12 month end will go where? To your other bank balances. And balances with the bank held as margin money means They have freezed your bank account for some purposes. The money which is there in your bank account, they have secured against some borrowing. I told there is some borrowing that you have taken, and there is some balance in the bank or fixed deposit. They've taken that as a lien and security. In that case, this is not a part of my cash and cash equivalent. To that extent, it is not a part of my, though it is coming under cash and cash equivalent, but I will not consider this as current asset. So balance with bank held as margin money or security against borrowing with a maturity of more than 3 months but less than 12 months. When the right time comes, we'll discuss about this in depth.
But still it will be shown in that.
Yes. But then where will you show otherwise? Short-term loans advances. Short-term loans advances. Loans advances to related parties. Income tax paid in advance. Means what? The actual provision of that is 100 rupees. But you paid by mistake advance money how much? 120 rupees you paid. Actual tax liabilities, what a provision you create is 100. But out of excitement to pay to income tax department, you paid 120. So how much extra you paid? 20 rupees extra you paid. So this will come back to me in future in form of refund. So anything that I get in future is asset. So where will I classify? Short-term advances. I paid advance extra money to income tax department. So I'll get this money back. So this is my advance. So if your advance is more than your provision, it is my net asset. Will be part of short-term loans advances. Sometimes what happens? Your provision is 100, but you paid only 60 rupees as advance money. So how much is yet to be paid? 40. So this is tax payable. So short-term provision, net provision will come in your short-term provision for tax. We have question based on this also. We'll discuss in depth when I do practical question. And then other loans advances. Other loans advances. If there is anything else, for example, prepaid expenses. Means what? I paid insurance money. Example. One 10/2024. I know you're getting bored. It's okay. We're done. 15 minutes, 10 minutes, we're done with it. Then we'll do a break and then we'll start a practical question. You'll enjoy. I'm telling you. 1/10/24, you paid 12,000 rupees premium for insurance that you have taken. Insurance is normally valid for how many period? How many years? 1 year. So when is this policy getting expired? Like 30 September 2025. Correct? Matching principle says that here the benefit is coming for 6 months. Here the benefit is coming for 6 months. So out of 12,000, the first 6 months of current year is going to be my current year expenses. Remaining 6 months ka amount that you have paid in advance now, it is your prepaid. Means you have paid this money to insurance department in advance. So this will come under short-term loans and advances. So prepaid expenses is a part of your other loans and advances. Don't put under other current assets. It is not your other current asset. It is a part of your short-term loans and advances. You're giving prepaid. Prepaid means you're giving advance money. Understand the difference. Prepaid is a part of your short-term loans and advances. Okay, not okay. Now, in the question, they're telling that you have given loans advances to directors or related parties. Short-term, long-term, nothing is mentioned. Always it is short-term. Always it is short-term. So any transaction with the directors or related parties is going to be short-term, short-term, short-term. Last is other current asset. We are done with this. Other current asset. Accrued income on investment. Means what? Interest earned. Money not received. Which means what? You made an investment here in the fixed deposit. 1 year you have kept the money. The bank said that I'll not pay you the money now, I'll pay you in the future. So your accrual concept says what? Since you waited for this period, since the income is pertaining to this period, the benefit is arising in this period, I need to record the income in this period only. So what is the entry for accrued interest? Accrued interest account debit to interest income. Interest income. We studied this in 11th standard and one more time in CA foundation. Let's say 10,000 rupees. So interest income will go where in your statement of P&L? Other income. Accrued interest where it should go? Sir, accrued interest means what? This 10,000 is earned. Money not received. Money not received now. But when will money be received? In future. Anything that I receive in future is asset. So which asset? Current asset. Now listen to me very carefully. If you're going to get the money, within the benchmark date, then this will be your other current asset. But if you're going to get this interest after the benchmark date, this is not your other current asset. This is your other non-current asset. Am I loud and clear? Now let me do one more example. Let's say you put one fixed deposit in bank, which said that they'll pay you the interest after the 4th year. So interest accumulated here 10,000. Interest accumulated here 10,000. interest accumulated here 10,000 and interest here 10,000. They said that this 1 lakh principal and 40,000 interest put together, 40,000 interest put together will pay you at the end of the 4th year. Okay. I am now on this reporting date. So Viksha, I am now on this reporting date. On this reporting date, this 10,000 is my accrued interest. Will I classify this as current or non-current? Non-current, because from here, if I calculate the benchmark date, this is my benchmark date. Since I'm going to receive this money beyond the benchmark date, this is my other non-current asset. But if this interest, accrued interest, is going to come within the benchmark period, then it is current. Otherwise, not. Logic is clear. If nothing is mentioned, we always assume that accrued income or accrued interest will come to me within benchmark date. Otherwise, if the question is properly given and you can analyze the data properly, then you have to decide properly whether this is going to be current or non-current based on the classification of the current asset points. Any problem? Dividend receivable. You invested in share market or mutual funds. The company declared the dividend in AGM, but they're yet to give the check to you, or you got the check, but you cannot encash it. You did not encash it. So it is receivable still. So that is my other current assets. PP held for sale. Means what? PP was in my building, was there in my PP. I was using it. Machinery was there in PP. I was using it. Now this machinery is useless. I want to sell it. So until you sell it, the day you got intention to sell it, and until you sell it, that will be reclassified from PP to other current assets. Other specify, if anything is there, specify the nature. Okay. I went to discuss what is contingent liability and capital commitment. Keep this pending. Officially, we are done with the format and discussion of assets and liabilities. In this, do you have any problem? You want to clap? What we have done is only 10% of the chapter. We just got the understanding. But mark my word, this 6-day or 7 classes that you spent with me is going to make your next 6 class peaceful. You know how? Each and every question that we're going to discuss, the moment I ask you what classification, instantly you can tell. And if somebody asks you why this is this classification, you'll be able to justify. So I've set a very strong base for the 6 or 7 classes. Now the question that we're going to do in next to 6 to 7 or 8 classes is going to be beautiful. So now we'll take a break. Online people, all those people who are watching this as a recording, I'll be ending this video now. I'll be starting a fresh video after the break, where I'll discuss question number 3 of the ICI module. We'll do one question with proper formatting and then we'll disperse for today. Thank you so much. Recorded people, bye. We'll see me in the next video. Thank you.